Hello everyone and welcome to today's HR Advice webinar, Redundancy, TUPE and Restructure, Navigating Cost Challenges. My name's Alice, I'm one of your hosts and presenters for the session, but as you can see, I'm also joined by some very special guests from Advisor Plus, who will introduce to you very shortly. And before we move on to the content of the webinar, we will go ahead and introduce ourselves. So as I said, my name is Alice. I'm a learning facilitator here at Sage and I specialise in webinar delivery. So you might have seen me if you've attended any of the HR advice webinars before, or any of the Sage 50 payroll or HR webinars too. But I'm also joined today by Advisor Plus HR Technical Consultant Rebecca Fox and Senior HR Advisor Katie Rees as well, and they're both here to share their expertise on today's topics. So Bex, do you want to introduce yourself first of all?
Yeah, of course. So my name's Bex. I've worked in HR for the past 6 years. My experience is with large retail organisations as both an advisor and now as a HR technical consultant. So I've completed my level 5 CIPD qualifications in HR management, and prior to working with Advisor Plus, I was a general manager in the hospitality sector for over 10 years. So my role as a HR technical consultant means I work quite closely with customers and the advisory team, as well as having the opportunity to work on a variety of HR consultancy projects. So I've just supported a large retail business in a 6-month change project, so have got quite a lot of hands-on experience in the last 6 months in redundancy and restructure. Katie, do you want to introduce yourself?
Hi, my name is Katie, of course. I've worked in HR and employment law for 25 years now. I've been an advisor with Advisor Plus for almost 3 years now, supporting customers with their ER issues and coaching their managers. Before this, I've worked in private practice, so that's firms of solicitors, in-house, for companies and also for consultancies. And I've been providing advice, consultancy services. I've worked as a litigator, representing clients in mediations, arbitrations, at early conciliation stage, and in the employment tribunals and the employment appeal tribunal. I've also delivered training, mock tribunals, and legal updates.
Perfect, thank you both so much. So yeah, that was a little bit about us. I do also want to take a look at what we'll be covering in the webinar too. So today, Bex and Katie will be focusing on how the increase in employee national insurance might impact redundancy, TUPE transfers and restructuring, and then also just provide practical guidance on managing these changes with your business. So without further ado, let's get going. Katie, we'll begin with you. So what types of things are impacting businesses' costs at the moment?
So some key changes that you'll likely be aware of this year include employee national insurance rates, which have increased from the 6th of April this year, so from 13.8% to 15%. And the secondary threshold, which is the point at which employers start paying NI, is reduced from 9,100 to 5,000 annually, which overall means higher costs of employing staff. So along with the high impact of inflation over the last few years and annual minimum wage rises, we do appreciate that operational costs can be a concern for small businesses.
Thank you. And Bex, have you seen any other things impacting businesses?
Yeah, so other inescapable impacts of late have been the recent market turmoil and ongoing unpredictability caused by the USA's tariff policies, which means businesses need to be particularly ready to adapt and respond to necessary changes, such as a downturn in revenue. Also, the impact of artificial intelligence seems to have come into the landscape for many businesses, sometimes as a step forward in efficiencies, but sometimes as a worry as regard to competitiveness. So it all makes for a climate in which redundancies or restructures may be required. So businesses are being ahead of the already or ready for planned changes are best equipped to weather any processes whilst mitigating risk wherever possible.
Thank you. And Katie, I have heard about a change regarding fire and rehire. Could you tell us a little bit more about that as well?
Yes, absolutely. This is one of the headline changes in the employment bill due to come into force in 2026, known as the fire and rehire changes. So the term fire and rehire refers to the practice of changing employment terms and conditions by way of dismissal and re-engagement. So typically in situations where it has not been possible to obtain employee or trade union consent. Every effort should be made initially to agree changes with employees, especially where there can be compromises made and agreements reached. Most often, only larger businesses would need to consider such a move, but it has been an option of last resort for a mix of employers for some time now. The practice came under the spotlight as a result of the high-profile P&O Ferries scandal, which saw the firing of 800 workers back in 2022. So this practice is technically lawful, but it is risky from a reputational and an industrial relations perspective, and the ultimate fairness test for any dismissals would be very much subject to the circumstances of each situation and the contract terms. So a new code of practice in response was introduced by the last government that sought to encourage employers to act fairly and responsibly in negotiations over changes in terms and conditions, and emphasise that fire and rehire should only be used as a very last resort. The code of practice came into effect in July 2024, but it didn't signify a legal shift in the lawfulness of dismissals. It did, however, provide that compliance with it or otherwise is admissible evidence in legal proceedings, like the failure to follow parts of the ACAS code of practice can be now in unfair dismissal cases. So that means that any relevant provision of the code must be considered by the courts and employment tribunals in cases, and any failure to comply could result in a 25% increase in awards for certain employment tribunal claims. So whilst the bill hasn't gone so far as to abolish fire and rehire in their entirety, it does restrict employers' ability to use these practices by closing the loopholes which allow firms to engage in these unscrupulous practices, to quote what they say there. So under the new law, it would be automatically unfair to dismiss an employee for refusing to agree to a variation of the terms and conditions of their employment, or because an employer intended to employ some other person to carry on varied terms to carry out substantially the same role. On the face of this restriction, the practice would no longer be possible, but there is a limited exception provided for by which dismissal will not be automatically unfair. So this is if the employer can show that they were acting in response to financial difficulties affecting their ability to carry on business as an ongoing concern. However, the employer must not have also been able to act reasonably at the time to avoid the need to make the variation to terms and conditions, and must have acted fairly in all the circumstances as well. The bill does also double the maximum protective award for failure to consult from 90 days to 180 days per affected employee. If 20 or more dismissals are being proposed, the employer is required to consult employee representatives about the proposals in the same way that they would do for collective redundancies. The protective award is a penalty for failing to consult properly. A 25% uplift for failing to follow the code of practice on fire and rehire will apply both to the protective award as well as to any unfair dismissal compensation. A double protective award plus the uplift is a major increase to the cost of getting this wrong. The impact is that it's more difficult to adopt this approach, but there is still some clarity yet to be provided as to just how those justification scenarios are going to be interpreted.
Thank you, Katie. All really great information. Leading on from this as well, how can businesses adapt prior to these changes happening?
In the meantime, businesses which are currently considering potential changes to terms and conditions that are unlikely to be achieved with employee agreement may wish to consider whether making changes sooner rather than later is better if they're looking to do this method, and also if they are going to do so, to look at the limited window in which dismissal and re-engagement still remains a potential practical option. Another angle to consider is to review the flexibility clauses in contracts to allow for future changes to be made a bit more easily. So such changes don't give carte blanche for an employer to make changes, but the presence of them can really help, and it is worth bearing in mind that an employer is never in a stronger position than at the point of hire. An employee is more unlikely to decline an offer due to the wider flexibility clause that might be there than they are to object to a variation in the future once they're really embedded.
Thank you, Katie. Are there any other changes that the bill is making that we might need to consider?
Yes, so the most significant change introduced by the bill is the removal of the 2-year qualification period for the right to claim unfair dismissal and the introduction of the probation clause. As it has stood for some time, 2 years continuous employment is needed before an employment tribunal is able to consider any claim for compensation for ordinary unfair dismissal from a dismissed employee. This has meant that regardless of the contractual probationary period in an employment contract, an employer can generally wait for almost 24 months and still dismiss without fear of facing an actionable claim for unfair dismissal. In Schedule 2 to the bill, however, the proposal is to completely remove that 2-year qualifying service requirement, meaning that employees will potentially have that right from the first day of their employment. So that's to bring a claim for compensation for unfair or constructive unfair dismissal. That's if their employer brings their contract to an end. The government also does intend to introduce a statutory initial period of employment, which is akin to a probationary period. So during this time, the general provisions under Section 98 of the Employment Rights Act will be relaxed, allowing an employer to apply a lighter touch process with greater flexibility to terminate employment with less risk of facing a claim for compensation. Further detail as to what this can entail, including what that IPE will comprise. That's yet to be outlined, and we'll publish this information when it becomes available.
Thank you. And in terms of these changes, what outcomes are we seeing with this?
Likely the need for businesses to respond quickly to changes in market circumstances, resulting in restructuring their business models, which will potentially see more redundancies, TUPE transfers if contracts are won or lost between businesses.
Is there a risk to employers and business if the outcome is to restructure and make redundancies or TUPE transfers?
Employers need to get clarity on the processes involved and to have some consideration of the risks to make effective decisions about what's right for their businesses. So naturally, employees and employers alike give most consideration to the standard risk of ordinary unfair dismissal, which is whether a dismissal is procedurally and substantively fair for an employee who's qualified for that right to claim unfair dismissal. And whilst we currently have this gap where the existing 2-year qualification period remains and the new rules come in 2026, it is worth refreshing what circumstances can give an employee day one rights despite having under 2 years service. So some of the potentially automatically unfair scenarios are less common than others, but it's always useful to know them and to bear them in mind just to be able to manage risk and balance those commercial decisions with possible areas of increased risk. It will also help to adopt this mindset and approach quite early in order to be better prepared for when those changes do come in. So dismissing an employee solely for actions related to health and safety concerns or raising those concerns, that can be considered automatically unfair dismissal, regardless of the employee's length of service. And that protection is outlined in Section 100 of the Employment Rights Act 1996. Also, by law, in the Public Interest Disclosure Act of 1998, whistleblowers are protected from unfair dismissal. So dismissing an employee for whistleblowing or whistleblowing on health and safety grounds, that's considered an automatically unfair dismissal also, regardless of service. That means there's no minimum period of service required to make a claim, and furthermore, compensation is not capped. It's automatically unfair dismissal also to dismiss an employee for being a trade union member, for them participating in trade union activities, or exercising any other trade union rights. Next up, dismissal is automatically unfair if the result is of an employee exercising or trying to exercise their statutory rights more generally, again, regardless of the length of their service or the reason given for dismissal. So that protection applies to a wide range of rights, including those relating to pay, leave, or other aspects of their employment. And then dismissals that are deemed to be discriminatory, for example, due to any of the protected characteristics, such as gender, age, sexual orientation as examples, also don't require any minimum service.
Thank you. With all that in mind then, what advice do you have for employers? What can they do?
Yes, so no matter how short the service of an employee might be, it is a useful investment in time just to ensure that care is being taken to gather all of the facts of a situation before regarding the final decision, just in case there are elements that could highlight increased risk which are not immediately apparent.
Thank you. Do you have any examples of a possible automatically unfair dismissal situation that you could talk about?
Yes, absolutely. So take the common example of an employee, for example, who has short service of less than 2 years at the moment and is already on an absence warning for that. So the employer say, is undertaking a redundancy exercise and is not necessarily selecting all those with short service to go, as they choose to apply the selection criteria to all of their staff. And say that the line manager is busy and they conducted some very quick return to work meetings and didn't question the circumstances prior to issuing that absence warning, because the employee had short service at the time and the warning seemed to be like a low risk action. Say the employee was also poor at communication about the reason for their absence, or they may have been reluctant to talk about their family responsibilities, their stresses, but they haven't in passing mentioned their disabled dependent. The redundancy manager initially identified that the employee was provisionally selected under that selection matrix, as most employees had similar scores in other areas, but few had absence warnings. So in this scenario, thankfully, the redundancy manager did decide that the individual consultation meeting was necessary to probe into those absences a little bit more. They probed with the employee and found out that due to the disabilities of the dependents of the employee and the caring responsibilities that he had, the employee had his own underlying stress condition really exacerbated. So with these protected characteristics of disability and the dependent's disability, coupled with some of the instances of absence meeting that definition of genuine emergency dependent leave, they were able to work out that if those instances were excluded, the employee had actually been off for less than other employees who hadn't even been issued with attendance management warnings at all. So that manager was really mindful that by selecting this employee for redundancy, due to those things, it could have been an automatically unfair dismissal and would have put the business at risk of a potential claim. So in this scenario, instead, the manager adjusted those criteria to account for the disabilities. They excluded the emergency dependent leave, and that gave the employee a score which was similar to his colleagues. So that employee may still have been fairly dismissed if he'd scored lower on those other factors, but identifying the risk in this way did mitigate against those potential claims.
It's a really, really interesting case there. Thank you. You did mention as well that one of the potential outcomes being redundancy. So Bex, can you talk us through that a little bit more? What is redundancy?
Yeah, so redundancy is a form of dismissal where an employer terminates an employee's contract because the job roles no longer are required. So it can't be because of any issues with the employee's performance or conduct. The main reason redundancies can occur is when businesses either changes what it does or how it operates. So for example, using new machinery or technology, reduces its workforce due to economic difficulties or restructuring, or even closes down or relocates. So in any redundancy process, the employee has specific rights, and these include redundancy pay, so a payment from the employer calculated based on years of service and weekly pay. The employee must have worked for the business for 2 years to be eligible for this. So notice period, so a period of time before the employment ends, during which the employee may continue to work or be paid in lieu of working. So usually the contractual notice period is paid in lieu. However, there might be some circumstances where you're reducing headcount, for example, that you might want that employee to work a certain time period, support in a handover, etc. So, and then consultation. So you are required to consult with an employee and or employee representatives about the redundancy process. So collective consultation must occur if you're making over 20 people redundant, and individual consultation will also still be required in that circumstance. They also should have time off to find a new job. So employees that might be entitled to time off during notice period or the process to look for alternative employment. It would be seen as fair to allow reasonable time off during the process to support the employee finding different employment. So for a redundancy to be considered fair, the employer must follow a fair process. So identifying the need for redundancy, consulting with the employees or their reps, selecting employees for redundancy fairly and objectively, and providing a reasonable amount of notice and redundancy pay.
Thank you, Bex. Can you talk me through a little bit more around the process of making someone redundant from a business?
Yeah, so before starting a redundancy process, you should consider all options to reduce or even avoid redundancies. So, for example, can you offer voluntary redundancy, change work hours, move employees into other roles, let go of any temporary staff or contract workers, limit and stop overtime, or even to start that, not hire any new employees. So, as pointed out before, the employer must identify the need for redundancy. So, this should always be last case scenario, and you should be able to detail why it's the only option. Redundancies are probably one of the most stressful processes someone can go through at work. So, some employees may have worked for the company for years, and the thought of having to start a new place of work, or even before that, attend interviews or write a CV, may impact someone's health hugely. So it's really important to remember that whilst redundancies may be necessary for the business, the employees must remain at the forefront of the business plans. So, like I said, you might not always be able to avoid redundancies, but by working with employees, you could find ways to save jobs and better understand how to plan for the future. It should always be part of the conversation in the consultation process. So then you should make a redundancy plan if that is going to be the only available option. So you'll share that with all the employees and put it into action. It can help you follow a fair process by doing this and avoid risk of legal claims. So it's a good idea to work with any trade union representatives or employee representatives when making a plan. And usually the plan should include, so all the options that you've considered before deciding redundancies might still be needed, the number of redundancies you're considering, and the pool of people that are going to be impacted. An announcement, the date and the detail that's going to be shared with the employees. And to keep employees informed and supported throughout the process, a good thing to do would be a pack that the employees would get, which details everything regarding the process. So from the announcement, the timeline, so consultation meetings, what the selection process looks like if you're reducing headcount. So is that an interview or a selection matrix? Support details, so the EAP, mental health first aiders, also how you're working out redundancy calculations, and frequently asked questions would be great. You'd then need to consult with all the employees affected, including those off work, so anyone on maternity leave or on sick leave. So for less than 20 employees, there's no formal period, but we'd always recommend 2 weeks minimum. Between 20 and 99 employees, at least 30 days before any dismissals take place. And for 100 or more employees, at least 45 days before any sort of dismissals take place. You'd also want to agree a fair selection criteria. So the use of a selection matrix or an interview process, whether redundancy pay and notice pay would be statutory or if there's anything in their contract, and an appeals process. So for any employees who think the redundancy process or their selection has been unfair. So for good practice is always to have scripts prepared for all formal consultation meetings to ensure that everyone's given the same information and nothing's missed. Like I said, it's a really tough experience for all involved, so those managing the process and also those impacted. So preparation is really key to ensuring fairness, support, and ensuring that you're following legislation and ACAS code of practice.
Yeah, and that's a really good point to make as well, thinking about the employees' mental health, is it's easy for managers to focus on the process instead.
Yeah, as mentioned previously, ensuring employees' welfare throughout the process is really, really important. So With the businesses I've worked for in the past, we've run drop-in sessions with different leads, so HR managers or mental health first aiders, wellbeing managers, if you've got those in the business. And we've also run sessions on CV writing, interview workshops, just to ensure that if the only possible outcome for that employee is dismissal through redundancy, they're supported through the next career journey. So as a leader in the business, it's also time to ensure engagement by looking after your employees. So if you are reducing headcount and you want to ensure that the employees staying with the business still trust and want to be part of the business, if there's any failings during that process, you could end up with a really disengaged workforce and end up with more vacancies, which are then going to impact profit and stability even more.
And Bex, the takeaway from that is that documenting and logging all decision-making stages and factors taken into account is a really valuable use of time, and that can go a long way to defending any claims made. Likewise, showing that you've had regard for employee well-being throughout this difficult process is not only good practice, but it can also help in the retention of staff after a process like redundancy is over.
Yeah, definitely. And you also mentioned the impact of TUPE transfers. So can you explain what TUPE is, Katie?
Absolutely. So TUPE has been around for decades now, and it stands for the Transfer of Undertaking, in brackets, Protection of Employment, close brackets, Regulations. So its purpose is simply to protect employees if the business in which they're employed changes hands. The effect is to automatically move employees from the old to the new employer, plus any liabilities associated with them. And that happens by operation of law. It was a law adopted by the UK in order to implement the EU's Acquired Rights Directive. And although we're now out of the European Union, that domestic law remains, and there's no suggestion of it being removed.
When can TUPE apply?
TUPE can apply when employers sell or buy part of a business, as long as it's a going concern. It can apply when they outsource or make a service provision change involving either an initial outsourcing of a service, so where services transfer from a customer to an external contractor, for example. It can happen during a subsequent transfer, so where services transfer from the first external contractor to a different external contractor. Or it can be bringing that service back in-house, so where services transfer from an external contractor back to the customer themselves. And then finally, there can be a grant or a lease or a license taken over of premises, and as long as that operates in the same business from the same premises, that can also apply. So TUPE applies to a large number of different business transactions, and it's really important that employers understand what business liabilities can arise. It applies where there's been a relevant transfer. So as a concept, the 2006 regulations clarified quite complicated case law to determine that what that means is it's a transfer of an economic entity which retains its identity. So in determining whether it's happened, the courts take into account factors such as the type of undertaking being transferred, whether any tangible assets are transferred, so that could be buildings, movable property. Next, whether any intangible assets are transferred and the extent of their value, whether the majority of the employees are taken over by the new employer, whether any customers are transferred, and the degree of similarity between the activities carried on before and then after the transfer. And then finally, the period for which those activities were suspended, if any. So TUPE will be a consideration in virtually all service provision changes, such as outsourcing and insourcing, and it can't always be assumed that TUPE will apply, as it is really dependent on a number of issues. So those issues can include the activities undertaken before and after the transfer, and about whether they're fundamentally the same or not. And then the staff providing those activities. So are they organised appropriately into groupings which provide the activities to the client? It's common for this issue to be regulated in contracts between clients, especially in outsourcing businesses. As always, however, a contract clause cannot override the law, and the reality of any specific situation will determine if it applies or not.
Thank you, Katie. From an employee's perspective then, what happens there?
So employees who are employed in the undertaking which is being transferred have their employment transferred straight through to the new employer. So employees can refuse or object, as it's referred to in the legislation, but depending on the circumstances of the case, if they do, they can lose very valuable legal rights to them, and they will be deemed to have resigned if they choose not to transfer. An employee can't just decide to stay with the current employer if the current employer doesn't have an alternative role for them, or the employer doesn't want to offer them an alternative role, nor is the existing employer obliged to find that alternative role for them. Employees have the legal right to transfer to the new employer on their existing terms and conditions, with all of their rights and their liabilities intact, but there are some special provisions for dealing with things like pensions. So effectively, the new employer steps into the shoes of the old employer, and it's as if the contract of employment was always made with that new employer.
Thank you again. So that was a little look at the employee and the kind of effect of how it affects them. But what does this process mean for employers? Is there any advice there?
Yeah, so when taking over a business or a part of a business or a contract, employers really need to be aware of what this means for them, not only taking on those employees, but most importantly, the liabilities associated with them. So incoming employers can't pick and choose which employees they want or exclude those that they don't want, as that would amount to a dismissal. And it's helped by the fact that the old employer is required to provide to the new employer written details of all of the employee's rights and liabilities that will transfer. So dismissals will be automatically unfair where the sole or the principal reason for the dismissal is in fact the transfer. Dismissals may not be automatically unfair where the dismissal is, however, deemed to be for an economical, technical, or organisational reason. So that's referred to as an ETO reason, as long as that reason requires a change in the workforce. So this ETO defence is narrow in scope, and it must entail changes in the workforce, for example, workforce numbers or job functions changing. There's also process to be mindful of as well, as a dismissal associated with a transfer, such as a redundancy, can still be unfair for other reasons, such as a failure to consult properly. So as long as we're making sure that we consider it and the process fully in the redundancy situation, then that should be fine. We also have to be mindful of any issues such as, even though we're using it to reduce costs, we can't harmonise terms and conditions, not just for the sake of it. So as the new employer is required to take on the employees on their existing terms and conditions of employment, it is prohibited from making any changes to the terms and conditions simply because of the transfer itself, or the variation is because of the transfer itself. So employers can, however, effect changes to terms and conditions where the contract allows for that to be changed, such as the application of a mobility clause or provision in the contract, or where the employer and the employee agree the change, and even if the sole reason is an ETO reason. ETO reasons require a change in the number of functions or the workforce, in the workforce or the location of the workforce. So the desire to harmonise terms and conditions of itself is not a legitimate reason. So looking at what you need to do to comply with TUPE as an employer. So employers involved in a business transfer, they must first of all inform the appropriate representatives of the affected employees. They must inform them about the transfer and any measures imposed, and they must consult on those proposed measures first. Certain specified information must be provided to the representatives long enough before the transfer to enable the outgoing employer to then consult with the employees about it and their reps. If there are any changes or proposals for changes following the transfer, then those measures will have to also be discussed with the reps of the affected employees. The incoming employer is required to provide the outgoing employer with information on those proposed measures to allow the outgoing employer to comply with its duty to inform and consult. And there are potential exemptions worth noting from those consultation provisions for micro businesses, so they're businesses for fewer than 10 employees in total.
You mentioned the incoming employer there. Is it different for outgoing employers?
Yeah, so the outgoing employer is the one that has a duty to provide the incoming employer with those written details of the transferring employees, and they include things like identity, age, particulars of employment, disciplinary and grievance records, things like employee claims, things like collective agreements, together with all associated rights and liabilities that will transfer. And that information must be given no later than 28 days before the transfer takes place, although in practice, the incoming employer will aim to attain that information much earlier. If there is a failure to comply with that duty by the outgoing employer, the incoming employer can apply to the Employment Tribunal for compensation, and that amount will be assessed with regard to those losses suffered. But there's a minimum award of £500 per employee, so that can certainly add up. Although it's not possible to contract out of TUPE applying, there are steps which both the outgoing and the ongoing employers can divide up between them as regards TUPE liabilities. So whilst under TUPE, employment liabilities connected to the transferring employees will always transfer to the incoming employer, employee claims should be made against the new employer, and the parties can still contractually divide up those liabilities between them by way of a different means of contractual indemnities.
Thank you, Katie. The last thing I mentioned was restructure. So what does this mean? How would it support businesses?
So businesses restructuring involves modifying a company's either financial, operational or organisational structure to improve efficiency, profitability and overall performance. So this is often in response to financial difficulties or market changes. They'll most likely in these circumstances would be an operational restructuring, so that can involve streamlining processes, optimizing workflows and improving resource allocation to enhance efficiency. Organisational restructure, so this involves changes to the company's structure, so reporting lines, the job roles to improve collaboration and decision making. This may lead to the two processes that we've discussed above. So for example, if you have a store manager for each location, but you restructure making multi-site managers, so one manager per 5 locations to reduce headcount and save costs.
Thank you, Bex. So to conclude with that, so what can employers do to manage risk in cases like this?
So ensure all processes are managed fairly and in line with the ACAS Code of Practice and legislation. So ensure if dismissal is the only available outcome, you're aware of what would be deemed automatically unfair. So pregnancy, including all reasons relating to maternity, discrimination against one of the protected characteristics, family leave, including parental leave, paternity leave, adoption leave, or time off for dependents, acting as a trade union representative or an employee representative, being part-time or fixed-term employee, and even joining or not choosing to join a trade union. And then the pay and working hours, so including the working time regulations and annual leave and national minimum wage, they would be all unfair dismissals.
Great, thank you so much. So that was some really great advice. That does actually kind of bring us to the end of the content that we've got for today. So I do just want to say thank you so much for sharing your thoughts with us. It's been really insightful. Following on from this, we have had some really great questions come through. So before we close off the session, I have picked out a couple of these to go through, if that's okay with the both of you. So let me just grab those now. Great. So the first question I've got for you, Bex, and that would be, who would be part of a collective consultation?
Okay, so if you need to collectively consult, you would invite trade union reps, if you were part of a trade union, or nominated employee representatives. So if you're not part of a union, you would only need to consult with nominated employee representatives, and they would be consulted with prior to individual consultations beginning, usually after the announcement is made that redundancy may be a potential outcome. Following the consultation period, you would ask employees to nominate themselves to be part of an employee an employee representative, and they would then feed back further details to the employees, and also put a case forward into how to stop or minimise redundancies to ensure that the pool of people is correct, and ask any questions on behalf of the employees. So failing to conduct collective consultation on redundancies when legally required can expose employees to significant risks, including potential claims for unfair dismissal, and compensation for failure to consult. Failure to comply with collective consultation rules could result in the employer having to pay a protective award of up to 90 days full pay for each affected employee.
Thank you, Bex. Next question I've got is for you again, if that's okay. So this one is, in redundancy, what is a selection matrix?
Okay, so a selection matrix is used to review employees' work history and to score on allocated sections. So the scoring sections can be made up of a number of categories. So ones I've used in the past is disciplinary record, absence record, but however, anything related to pregnancy, maternity should not be included, and you should also be really mindful with underlying health conditions and disabilities. We've also used end of year appraisal scores and manager feedback on role description and any performance concerns. So if there've not been any documented conversations or performance improvement plans in place around an employee's performance, it'd be really difficult to score a low score, which is why people management's always really crucial in ensuring that this is a fair process. So the employees would also have sight of this scoring and may raise questions based on the scoring. So it's really important that it's factual and not opinion based. So yeah, I think the other thing that I would also say is that having an independent person to calibrate after would also ensure fairness. So if you've got a number of line managers completing it for their direct line reports, for example, if you're scoring a 1 is low and a 5 is high, one manager's 3 might be another manager's 5. So it's really important that an independent person reviews all the documents together to ensure that the scoring is reflective of the details. It's also advised not to use last in, first out, or length of service as a primary or sole criterion, as that can kind of lead to claims of age discrimination. So you can't select an employee for redundancy based on their pay, working hours, or any statutory rights related to pay or working hours, such as, like we've said before, the annual leave or national minimum wage.
Thank you. Next question I've picked out, this one's for you, Katie. So this one is, can a woman returning from maternity leave still be selected for redundancy? What is the golden ticket?
All right, thank you. So women returning from maternity leave do have enhanced redundancy protection. So if their job is at risk of redundancy, they can still be eligible to become at risk if their role is one of those that are at risk, and they can still be selected at that initial stage. They must, however, be offered any suitable alternative roles that become available, and they have priority over other employees in being allocated to those roles. So this protection extends to 18 months from the child's birth date. So if there isn't any alternative role, for example, in a downsizing scenario, they can still be fairly dismissed. You would just want to be making really sure that the matrix was fair and that there was no disadvantage in the scoring due to the period that the woman spent on maternity leave or in catching up thereafter. For example, if they were a little less productive for a while whilst needing to do some refresher training. A good rule of thumb would essentially be, if the score would be the same regardless of the maternity leave, then it would be fair.
Perfect. Really great answer there. Thank you. I know we're running out of time now, but I do just have one more question, and this one's for you, Bex. So last question is going to be, to be really clear with TUPE, what information do I have to provide to employees if this was an outcome for the business?
Okay, so you'd need to give them the fact of the transfer. So you must inform employees and their reps that the TUPE transfer is taking place, the reason for the transfer, the timing of the transfer, so the date or the proposed date of the transfer, what impact is the transfer going to have, so the legal, economic or social implications, measures in connection with the transfer. So the employer must inform employees and the reps about any measures they envisage taking in relation to the transfer, or if there's no measures that are planned. You also must engage in meaningful consultation with the employees or the reps about the measures that they're envisaged. Considering views, so this is important for everything that we've discussed above. So the employer must generally consider the views of the employees and the reps. So I guess in essence, the employee's obligations are to inform employees and reps about the transfer and its implications, provide the new employer with the relevant information about the transferring workforce, and then consult with the employees and the reps about the proposed measures.
Thank you so much, and thank you all for sending in your questions too. Hopefully those answers have been helpful. Just want to say I can still see there's some questions that we've not managed to answer. If that's the case, don't worry, we will be following up with you personally after the session, so you will still get an answer to the questions that you've asked. Bex and Katie, just want to say thanks again for your insight and guidance today. That's been really, really informative. And before we end the session, just a couple of things before we actually finish. So first thing, I just want to remind you that you can download the handouts from today. So that's going to be a copy of the slides in the presentation with all of the information that we've taken you through. And yeah, Advisor Plus will be providing another kind of summary document after the session too, so we'll be able to kind of reach out with that. If you would like our help with anything that we've covered, please feel free to check out any of the topics covered in the Sage HR Advice portal. Or if you are a professional or premium customer already, don't hesitate to call the advice line. So one of the consultants will happily provide guidance on any of the topics that we've covered today as well. Another thing just to let you know of is Sage HR Advice. So that's going to be here to help you navigate and simplify these proposed changes that we've mentioned today. And then alongside it, you've also got Sage HR. So this is where you can automate and simplify tasks, calculate holiday entitlement, arrange things like shift scheduling based on people's contracted hours, and automatically log hours worked too. We do have webinar recordings of some of the different modules of Sage HR if you are interested in knowing a little bit more about those, and you can find those at sage.co.uk/webinars. The Sage HR Advice, we do have some amazing new offerings too, including small business toolkits, a digital e-learn library, and that gets regularly updated with new content, and then also additional services. So this is things like on-site health and safety assessments. I would highly recommend getting more information if that does sound like something that you would benefit from. And yeah, before we end the session, I will be launching a poll that you can respond to if you would like a bit more information on those. And something new in this session this time, we are actually asking you to have your say too. So you do get the opportunity to give us feedback as you exit the webinar. As normal, you will see the survey there, but we'd also love to know what webinars you'd like to see going forward. So are there any specific topics that you'd like to see or areas of HR that you'd like advice on? And if so, what are they? So feel free to suggest them there in the Q&A panel. We will be leaving that open until the end of the session, and I'll be passing these on to my colleagues. And as I say, you will also have the webinar survey as you kind of exit the session today, where you can also pop in any suggestions in there too. As for webinars, I did mention that I also do those on different products too, so Sage 50 Payroll, also Sage HR. We do have a session on the Sage HR Leave Management module today at 2 p.m, so if you're free for that, we'll be walking you through all of the features of that, just so you can see what that's all about. And then yeah, a couple more sessions coming up for Sage 50 Payroll too. We have also booked in our next Advisor Plus webinar, and that's all about the Employee Rights Bill coming up on the 15th of May. So more information of what that is going to include, again, can be found at sage.co.uk/webinars. But yeah, with that being said, that does bring us to a close today. So thank you very much. I know we have run over by about 5 minutes or so, so thanks for sticking with us till the end. As I say, we will be following up with any of those unanswered questions that were in the Q&A panel. And yeah, again, last thing from me, you will see a short survey as you exit the webinar. So if you do have just a minute to fill that out, or you've got any suggestions for future topics as well, would really, really appreciate that. So thanks again for everyone joining us today and spending your time here. And special thanks again to Katie and Bex for their expertise too. Hopefully we'll see you on another webinar very soon, but from all of us, it is goodbye for now.